Howdy ho, everyone, and welcome to Thursday edition of this program named Learn to Trade Live and Free. And we should be streaming live to YouTube. We should be streaming live to Facebook. And if you are joining us for the first time, welcome to you. Those of you who join all the time, welcome to you as well. Wonderful to have you on board as always, and we look forward to being able to make some money today. I've got a good feeling in my bones, and the reason I have a good feeling in my bones is because the setups that I was looking for from Sunday have finally come to pass. The setups, that is, not the trades. So we can hope for some nice action. I'm still not seeing this. Really extremely frustrating. Not seeing that we are streaming live, but yesterday when I said that, everything was a-okay. So I will just continue. And for those of you who are in at the moment, if you could let me know that you could actually hear me, that would be absolutely wonderful. According to the little indicator here, it's telling me that we are live, but when I look at YouTube, I see only a notice that says live stream offline. That is, now there it is. There you go. Happy days. Goodness gracious me. Once again, welcome aboard, guys. Hi, Swee. How are we all doing? I think the link provided via Telegram not working. Okay, that's interesting. Very interesting. I don't know. Was that the case last night? I don't know about that because we had a hiccup last night, guys, where nobody could get into the room except Ash and myself. So we had a wonderful conversation between ourselves, but very little else occurred. I don't know. I can't even remember if we took a trade. Maybe we did. Maybe it won.
Oh, we did.
Did we? What happened? What did we do?
I went short on the footsie. I don't know. That was all we had.
Okay, yeah, that's right. Was that a winner?
Yeah. It's still going, still running. I can show everybody that if you like. We got. Did you want to place the pound? Have you done the pound already?
I will.
Okay.
Sorry. Yeah, I'll place the trout. I will place the pound trade. And if you guys were worried yesterday about small candles and small take profits, that won't be the case today. Certainly not if we go long. So let's place the orders. Actually, I'll put it up on the chart first, shall I? So that you guys are well aware. Kumar's going to hate me because I've changed the parameters of this trade now. Okay, so pound, US dollar, OCO. We're buying at the high of that bar, rounded up, and I can't see it, of course. I should be able to tell here, shouldn't I? The buy would be 131.98 minus 15, yeah. High of the highest candle, 131.83. So we'll go to 131.84 will be our entry. 1.3184, and our stop loss will be the low of the last three candles, which is 1.3122. 1.3122. So there you go. We've got a decent range today. That's all we need for that. I can now dispense with the EA and place the trade. Firstly, the sell, which is, as we just witnessed, 1.3122. Interesting bar, that last one on the pound.
Yeah, Bank of England out today, mate. So could be an interesting day for the pound.
It could well be. NFP tomorrow as well. So interesting day. Okay, that's the buy. The sell that news, as usual, isn't till what, 12:45 your time or something?
I think it's about that. Yeah, let's have a look.
That's generally the time it happens. 3184. And 3122. Uh-oh. What have I done? Okay. Sell stop. It should be buy stop. That's why. That's better. Rightio. Now, those of you who are not aware how we're trading this these days, based on just one filter that I've added, or two filters that I've added actually, but it's improved the results in the first month of April immeasurably. So we'll go with it until we add some more filters. So the first thing we do is look for a level of resistance if we're going long, so we can take our first profit. If we can't find a level of resistance, then we're just above that level. Then we use a percentage of the candle. So there is a level just above entry. The high of that is 1.3200. We're entering it, so 16 pips, that'll do. It's the size of our bar. Oh, we know that, don't we? 3184, 62 pips. And what did I say that was? 16. No, that's not big enough. We'll have to go to the next one, which is okay. 13209 will be our first take profit on the long. 13209. No, not that one, you goose. That one. One 13209. And for the short, if that were to be triggered, we'll go to the daily, have a look there. And the short gets triggered there. Whew. It's got to be daily pivot, hasn't it? But that's another filter that we add. We have to take profit before the daily pivot, or we don't take the trade. It's one or the other. And let me see the reward to risk on that. So 62 pips versus 10. It ain't great. It ain't great. But I'm okay with it. I think if it goes beyond here, we'll go to the daily pivot. So 10 pips, we will take profit at 9, which is one above the daily pivot. Daily pivot is at 13109, so we'll take 13110 as our first take profit. It's going to be a bad reward because of that, unless we go a long way, of course. But we've got a double top here. We might have a little bit of a fake out or a bull trap, and let's see what happens. We could go all the way down there. We'll see. Righto, so that's it, guys. We've got a first take profit on this at 3209 if we go long, or 1.3209 if we go long. And if we go short, 1.3110. We will obviously cancel one or the other based on which one triggers. Righto, mates. I've got a few orders in the market, but nothing's close. So let's go and have a look at yours.
Okay, so we got a FTSE 100 shorts going on from yesterday, and might still be an opportunity here for people as well. Let me see. I'll make sure I've got the right screen. There we go.
Hello, everyone who said hello, by the way.
Oh yeah, how you doing, guys?
Kumar did message me. Yes. Thank you very much indeed.
So we tried to get a FTSE 100 short the other day and got stopped out on that one. But I said, you know, if we believe in the trade, just let it go to a higher level and we can get it again. And that's what's happened. So if you remember, mate, we were talking about this inverted head and shoulders on the hourly, and I took the trade even, you know, I think it was here we took the first trade here with a stop up here, maybe a little bit higher around about the 70 level. But the good thing about this is that actually we got the price, the sell price above where the stop was. So as long as we get down to the original area, actually we are going to be slightly in the money from our original price point. Just reacting around this monthly pivot now, just seeing a little bit of weakness across the board. But actually, the Bank of England have already reported, which is pretty cool. So yeah, which we'll come to in a moment. I beg your pardon?
That's what that big bar was all about.
Yes, yeah. Sorry, mate, you've gone a little bit quiet.
Am I?
Not sure why. So if you guys want to get into this as well, if you like the trade, now remember we're really trading the daily. Let me just bring this onto a clean chart here. We're really trading the daily. So so yesterday's bar wasn't particularly negative, but I quite like the fact that price action across the board in the US was pretty positive. The Dow Jones broke a level, and the S&P continued to grind its way higher, as did the Nasdaq. Even though I think the Nasdaq's probably the one that's under most pressure in the US. We're still waiting for that deal to come out of Capitol Hill, and there's no announcement on whether they've got anything yet, but it sounds like they're making some progress. But I quite liked the fact that the FTSE didn't go too far. So, you know, there's two ways to trade this really from here. You can either try and get in at the low and see if there's a trade down there. There might even be a wave ride. I'm not sure. I haven't checked on the template from that. Or you can wait for an intraday pullback if you like it short. You know, you got to decide on whether you like it short. Now, if we look at this on a 5-minute chart here, the level that is probably the selling opportunity is probably around the bounce point here and this this horizontal level here. So could be another entry if you guys want to take it around about the 60-50 level, and you could even put your stops just above at 60-70. Let me just see whether that would be a wise thing to do. Yeah, it could be. It could be. Might be better to put stops above the pattern line. Could tuck in there. In actual fact, let's do it like that instead. Yeah, probably better to put stops just above the pattern line, above this this closing price here at 60. Well, call it 61. So that'd be a 50 pip trade. So entry would be 60-50 with a stop loss at 60. Sorry, 61. I think that looks pretty good for a short. Now, if you prefer the long, if you prefer to take a long in the market rather than a short, I like the FTSE for a short, but if you prefer to take a long rather than a short, now we'll talk about the Bank of England in a moment and why that would probably affect the FTSE negatively today as well. If you prefer to take a long rather than the short, the DAX looks pretty good. Just had some decent numbers out of Germany. And it's, you know, it's a weak number, so it's not anything particularly significant. But the DAX does look pretty good for a long. We've had some fairly negative looking bars, and I don't love the pattern. But if we are looking at this on a 4-hour time frame, that starts to look completely different. You know, that looks like an inverted head and shoulders, and you know, there could be a case to be made to have a look at an entry on this one there as well. So I think you could be looking at a DAX long and a FTSE short or a FTSE short, depending on which way you think the market's going. The realistically, now you can, there's a couple of ways to trade this. You could try and pick it up somewhere around about this right shoulder area, or you can wait for the break to the upside and try and trade it along this level. That would probably be better now. So let this one, see if it can take off, come and retest without breaking below, and then you're trying to pick it up, somewhere along this level here, which could even be a horizontal level as well. Horizontal level at 12,745, so it's still 100 pips above where we are now, which is quite a lot actually. That's the horizontal level it needs to break through. Maybe 12,700 would be a decent enough level to try and pick that up. So that would be my counsel, looking for a DAX to the upside. Now it could be that if global equities go higher, the FTSE may get dragged higher as well. So you've really got to think about whether you believe in an equity run from here, or whether you believe in a move lower to the downside. Because if we look at the US situation, the Dow Jones Industrials did actually burst through a level yesterday, quite a significant level as well, and that would potentially see us right back up to the 70. In fact, yeah, I'd say that's around about right. There's probably another 300 pips to the upside with the DAX. Have I just frozen? Am I still on? Yep, I think I am. Yeah, there's potentially another 300 pips to the upside with the DAX. There's another 1% high, sorry, with the Dow, another 1% higher with the Dow before it's under major pressure. But now we're through this particular level. But the key is, does this hold? Because if we get that deal out of Capitol Hill, I think it probably does. There's a chance that this comes back and tests here. So, conversely, you may not want to trade the DAX. I mean, maybe you want to trade or the FTSE. Maybe you want to trade the Dow instead. And if that's the preferred option, somewhere around about the 27,000 mark would be the area that I would suggest with the Dow. It's got to hold that particular point. It won't hold that point, or it'd be unlikely. I shouldn't say it won't. It'd be unlikely to hold that point if they don't get a deal out of Capitol Hill. If they get the deal, this is probably going to go up to the next level and possibly even beyond. Maybe we genuinely have a decent run now with the Dow Jones Industrials back to the upside, all the way back up to 29,000. I'm not sure, but there are options and opportunities today, mate.
Right, mate. I think so too, and I should share a few if you're done for now.
I am, mate. Yeah, your mic is your mic got quiet, or is it me? I think your mic might be a little bit quieter, mate.
I don't know. How am I sounding, guys? Can anyone hear me as normal, or am I down on vol? Somebody will say, I'm sure.
It's getting better. It's getting better.
Okay.
I'm used to you sounding like Brian Blessed.
Who's he?
Gordon's alive. Have you never seen Flash Gordon?
Oh, that's the speaker, is it?
Not the speaker, no. Brian Blessed. Oh, mate, Brian Blessed's a very famous man. He's got an amazing voice.
What's he do?
Well, he's an actor. He's very mad, but he's an actor. He's an actor. He's brilliant. He's the guy that was the Vulcan or something like that in Flash Gordon, in the movie Flash Gordon in the 1980s.
Oh, okay, got it.
Yeah.
Righto, I'm soft. Let me see. Now.
I think you should have a listen to Brian Blessed.
Okay, I'll have a listen.
You could learn a lot from him, mate.
Oh, I'm sure I could. Absolutely. I'll try and do something about my volume in a tick, guys. But before I do that, I'll shout for now. Oh, that's not what I meant to do either. So a lot of these are going to be aggregated risk, guys. Dollar yen, we're still in dollar yen. Going nowhere. There's nothing new about that. I have moved my stop loss just to make sure I don't lose on this trade. I've moved it above the daily bar. And if it goes north, then, you know, it wouldn't surprise me, but it shouldn't. I'll put it that way. If it goes beyond the daily bar, then I think it's probably going to go as a bounce off the weekly pivot and probably go back to this breakout area. So that's why I just want to tighten my stops up there. I've got to, what else have I got to do? No, management. If you're still in pound Kiwi, yeah, well, how can you be disappointed, I suppose, when you're taking off again? But I really, really wanted to scale into this at this level, but we haven't got the pullback. Maybe we still will. This may be a fake out, but at this point in time, nothing to do there. Pound Aussie, pretty much the same. I'm an Aussie bear today, not necessarily a pound bull. I was ready to trade this as a break and retest of the weekly pivot. False break of that trade line in the weekly pivot, didn't come back to it. Blast. So I haven't been able to scale into either of those, pound Aussie or pound Kiwi. Euro pound, I did consider trading to yesterday's bar, but I've just kept the bar from, what's that, Tuesday as our trigger candle, and I have replaced that order, so that's still in the market. The bar that we're currently witnessing on the daily chart is very, very interesting, and as I said yesterday, this looks very much like it may be a false break of the support trade line and indeed the bottom of the range, which of course is that ascending channel that we've been watching. This, if it closes as such tomorrow, I will place an order long above that bar. I'll still keep the short in as well, but I'll place an order long above the bar, as long as we don't get triggered in, of course. We certainly don't want that to happen and then place a long, or then for it to go long rather. So I'm leaving that order in place, the short, and I'm also watching this very, very closely. If it is a bearish decisive bar, I will place an order above it. If it's not, then I shan't. So if it gets close to, you know, being a positive bar or even a low test bar, I don't want to know about it. Now, new orders. Kiwi yen. Kiwi yen, I've got a short placed underneath Kiwi yen. They are the parameters around which you can follow if you are so desirous. What am I playing here? Well, a few things really. At the end of the day, what I've got is on the daily chart, which is where we're trading it. I've got a big double top sitting there. We've had a retrace. We've had a failed rally, in my humble opinion, failed rally, went into a range, and we've now got an equal lower high. If I can get rid of that. So I'm placing my order just, this is a risky one because the level's awful, but I do like the setup. So I'm willing to risk 0.25% on it as an early entry. If we get this and it does follow through and break clear of this rangy area that we're in, and certainly these resistance and support levels, then I'd be happy to scale in on any pullback, because this could be on its way. And if it is on its way, we're down here somewhere. So you would think that we will find support here and get a pullback. Then I'd be looking to scale into that, similar to what I'm trying to do on the pound Kiwi and pound Aussie, which just haven't set up for us yet. Now, as I said, these are very, very similar trades. Aussie yen is exactly the same, playing a double top here and a lower high, significant lower high like this one, apart from, again, there is an issue with it. Very, very seldom do you get the perfect setup, and this is a case in point. We are trading just below the monthly and weekly pivots, which are combined. It's hard to know, you know, where to put your entry, whether you go 10 pips, 15 pips, 20 pips, but you've missed all that space and that early entry if you really go too low. So I think I'm a few pips underneath those pivots, and that's okay. We again are prepared to take that risk. I have to take profit here though, at this level. So if you wanted to have a look at this one, they are the parameters on your screen. As I said, very, very similar to Kiwi yen. In fact, probably the same trade. So aggregate your risk on that. That's why I've only gone 0.25% on both, which effectively is 0.5% risk that I'm taking, which is probably a little bit too much given that they do have issues, both of them. What else have I got? I think that's, oh no, there is another one. 4-hour chart, Aussie CAD. There it is. Okay. Again, this is very, very similar to what we would be trading on Aussie yen and Kiwi yen, but we should be safe in the market by the time that they are triggered, if they are to trigger. Now we're playing the break of this little pullback, this little retracement, which is a little bit flaggish. And of course we are, as usual, playing counter trend, but I'm okay with that. I do like the shape of this actually. I'll hesitate to call that a bearish engulfing bar, but it's probably its first cousin. And then we've come back and retested the weekly pivot. I like that. Again, we've had we do have issues here because we've tried this twice before and failed to go on with the job. This, why do I think this is the one? Because it's tested the weekly pivot, that's all. So it's got that extra little bit of pizzazz to it, if you like. So again, we're short this one, 4-hour chart. They are the parameters that are on your screen if you're interested in following it. Again, this will be a very, very early entry to a potential reversal and plenty of time to get. And if you're not ready to get into this, that's fine. Wait for the break and retest of the pretty much the level where I've got TP1, I would have thought would be pretty reasonable. That's kind of a neckline as well. Break, retest, go. So that's where I'm at with 8 minutes to go in the first 30-minute candle of the day. And I'll have a look at the 30-minute charts in a little bit. A few questions. So we stopped using Sino. Yes, sorry, Sino, I'll get to you. So we stopped using 10, 15 pips above below the entry bars for OCO and no more tracking ended trade at 15-minute time frame and trail stop loss accordingly. Correct. So I'll briefly go through that again for those of you who are new to this and what we are doing. Let me go to that's the one we're trading on. What we're doing is entering at the top of the range, still the 3-bar range. So let me go to the hourly chart. That might help. Still a little bit loose around what I consider to be TP1, but what we're using at the moment is a horizontal level, so a support and resistance level. It could be a trend line, it could be DR1, it could be DS1, it could be anything. But if it is, and certainly if it's a pivot like an untested daily pivot, we have to take profit before there. So TP1's got to be before the daily pivot. That makes our reward to risk very, very skinny, not as skinny as it was yet. Well, the reward to risk yesterday was okay, but 4 pips of TP1 was a little bit crazy. But that's the rule. And it did it save us anything or did it cost us? Where were we yesterday? Here it rallied, came back. May well have saved us. By the look of that. Depends where you took your profit, I suppose. Oh, you would have taken profit there because it's probably 2 to 1. That was your reward. That was your risk there yesterday. 9 pips. Yeah, there's nearly 2.5, nearly 3 to 1 there. You would have had to have taken profit there. So yeah, a little bit iffy on those. How often do we get a 9 pip candle? I suppose we can coming out of Asia session. Sorry, I'm talking softly. I've got to raise my voice until I can work out this volume issue. So to go on with the job here, if we don't have a resistance area above us, then we will use either a third or a half of the candle, the master candle, as our TP1. I favor a third but I'm using a half at the moment, unless we've got support or resistance. If we've got support or resistance, we have to take profit. It's just non-negotiable. And that's what the improved record is based on, those filters that I did add, which is primarily the system that I use. That's my trading strategy, right? I've actually adopted it into this breakout thing, and it just improved it by an immense amount, which really makes me smile, because it puts an underline under the strategy that it does work over time. Not that we're over a lot of time. That was only a month of back testing / forward testing. So our TP1 will be, let's say, a half of our master candle, unless there is a support or resistance area underneath, at which point we will take our profit. Now, if it's like 1/10 of our risk, then we just don't take the trade. Thank you, Juan. That's good. I am kind of elevating my volume a little bit. So that's the rule on TP1. Apart from, as soon as you take TP1, you must take half of the risk. In other words, if you're trading at 1%, you have, and don't do this, by the way, we're still in beta mode. Do not risk 1% on these. You have to take half off the table. So let's say for today, if we were to be triggered long, our first take profit is 25 pips. Then we have to take our stop loss as soon as we hit TP1 from where it is now, which is 60 something, up to 25. So 25 pips below entry, which would be there. Soon as you hit TP1, you have to do that, take half off the table. Effectively, that gives you a free trade. And if it carries on and we get a nice little run out of it, happy days. The next parameter, if TP1 is not 1-to-1, sorry, if TP1 is 1-to-1, then we take our TP2 at 2-to-1. In fact, we'll leave that as a given. No, we won't. We can't do that. Sorry. I did work this out before. If you take TP1 and it is a half of your master candle, then you've got to take TP2 at 1-to-1. If it is beyond 1-to-1, then you take your second profit at 2-to-1. TP1 is either at a support or resistance level. So in this case, we're using a resistance level for the long, and that resistance level is here. The high of this bar, the high of that bar there. That's the resistance level we're using. And if that is not the case, in fact, if we don't have a resistance level, which will be very rare, if we don't have a resistance level to use as our TP1, we will use half of the master candle. So in today's case, the master candle is 62 pips, I think I said. Yep. We would use a TP1 of 31 pips. Okay. And then if we did that, we would take TP2 at 62 pips or 1-to-1 and remove another half of the half left. So in other words, take half off at TP1, move our stops to safe area, take half of the half left, or a quarter of the original, if you like, at TP2, and then we'll just let the rest rip. We'll trail that then on 2 bars. Hopefully you've got that. It is a little bit more than you're used to, but it is pretty much out of my manual, which one day I'll write, that how I trade my strategy. Righto. All good? Pound Aussie, I was bearish at 182.435, but suddenly it shot up with the UK Open. Yeah, I was waiting for it to pull back a bit to Ravinder. And so, not much you can do about that news, I'm afraid. Yeah, mate.
Yeah. Well, just to kind of let's just go over the pound and the pound news. So the Bank of England have left rates on hold. So it was reported at 7, mate, which is pretty bad that I didn't know that, but it was reported at 7.
Was this scheduled at 7 or did they just crib it?
Oh, that I
didn't
don't
know.
know.
I've got to say.
The Bank of England governor is out at 12:30, so maybe the devil will be in the detail later on, and that will see a bit more movement. But the fact is, the official bank rate it's strange. You know what? I was reading this at 6:30 this morning, and the report was that the projection was that they would leave rates where they were. And continue their bond buying as it was. So even though the Bank of England say the interest rates could go lower than the current level, just above zero, we do not expect any urgency in the MPC's intention to actually cut into negative territory. While COVID-19 has forced policymakers around the world into emergency action, this is the big thing. Britain faces the extra risk of the Brexit shock when a no-change period for its trade with the European Union expires at 2020. No new deal has yet been reached, and I think that's the big problem. That's the elephant in the room, really, for the Bank of England, is the fact that they're going to need some tools. They, and they know that, and I suppose that's the problem right across the board, and that is the problem with the UK, which is why I'm finding it difficult to like the pound, be confident with the pound, be confident with trading the pound long, because the Brexit situation is something that no other country and no other currency is going to have to take on. So while all the other countries have got their tools in place to fight COVID-19, the Bank of England are probably having to set aside a certain amount of money just to make sure that they don't get a kind of double issue with what's going on with COVID-19, with the Brexit situation. So it's very, very difficult. And I in that regard, I suppose that if the Bank of England, if we can get through this period, if we can get through the COVID-19, but we get a trade deal, the pound's going to look incredibly attractive because it is probably keeping its powder dry and just keeping some funds back. But if it doesn't, if they don't get that deal, the pound is just going to look like an absolute dog in comparison to things. And we're always in this kind of wait and see mode, and we're always kind of hoping for something to happen with the pound. But now this has turned up. Now COVID-19's turned up. Everybody's really rushing to try and fight this particular problem, and they don't really have the time or the energy or the focus to look at something else, which is the Brexit situation. So the pound and the UK economies in all sorts of problems. It's in a big tiz if you compare it to some of the other other economies. The US economy has got its own issue, which is why we continue to see gold go higher along with bonds. Because people are, I'm sure, very, very concerned with the fact that the U.S. government is, the Bank of the Fed is doing something similar. They're putting lots and lots of stimulus in. There's going to be a point where they will also run out of tools. And what then happens to the dollar? I mean, we've already seen the effects of the dollar during this particular period, and really one of two things is going to happen to the dollar at this point. Either it does actually start to gain some strength, which they're going to need to bring in at some point. They're going to need to rush to correct at some point. Or
how are they going to do that? They're not going to raise interest rates. So.
Well, exactly, mate. I don't know. I really don't know. It's going to take a very, very creative and clever group of people to really kind of change and switch this thing around. So
new president.
I don't think it's to do with the president. I mean, because too much, because the Fed really. I mean, they own half of America now, don't they? You're thinking about what they've been buying recently, and the debt they've been buying. They've been buying corporate debt, which means they own the company in a lot of respects. Yeah. So it's going to be down to the Fed. But but so either the dollar will strengthen, and probably strengthen significantly from where we are, or it won't be the reserve currency anymore. And then what happens? And I suspect we will probably go into some sort of transition phase, maybe over the next decade. In fact, I was talking to my buddy Mario about this last night, and we both were pretty agreed that that it's going to be gold. Gold will have to be the transition mechanism as we find the next currency. Well, what's it going to be? Is it going to be the euro? Could be, I suppose.
Ooh, doubt it.
I would doubt it as well. It would be a contender because it's the next biggest. But what else could it be? And the other thing, obviously, it could be, and I'm sure Shukri will be all over this. I suppose it could be a cryptocurrency, but the likelihood that it's a cryptocurrency which is in existence right now is extremely slim, because it's none of the cryptocurrencies that we have that we are conventionally trading right now, i.e., Bitcoin, Ethereum, I suppose Ripple, Cardano, some of those guys, they are not going to be taken on by the major governments. So if the major governments aren't going to, if they're going to go and establish their own currencies, then it's going to be one of those that will be the reserve currency eventually. But the question is, what do we do in between times? I'd be very surprised if Bitcoin became the reserve currency for the period while we sort things out. It will probably go back to historical convention, which is gold.
the way it's always been.
Yes, exactly. And I'd be interested as well.
How about rice? How about beef? How about water?
Well, I mean, water would be a really interesting one, but I would be really interested to know whether there was a Bitcoin equivalent throughout history. Has there been a Bitcoin equivalent? And I don't mean a digital currency, but a currency that came along as something that people used to trade with and effectively had as the next big thing. And there must have been, I say it with the idea that there must have been probably many throughout history. Aluminium actually would be a really good example. At one point, aluminium was thought of as this precious metal. And now we've got it using it as tin foil. It's pretty much worthless in comparison to gold. But there have been other suitors to the crown. And I wouldn't be surprised if Bitcoin is quite similar. Now, I'm not saying that means that we should be moving, and ignoring Bitcoin, because the phase we are in is probably for a crypto-based mechanism for the next 50 years. But the
interesting part, Ash, is if you and I don't know, then it's a good chance that most of the punters out there have no idea, and therefore will be steered by whoever comes up with the best sales pitch.
Well,
Shukri,
absolutely.
You're doing a good job of that.
Yeah, absolutely. Well, that's very true. But we go back to convention, and convention is that we look at gold. Because every single time there has been a significant change in the financial parameters and worldwide economy, gold always wins out. So does that mean it goes to 5,000 from here? It could, but and the reason that it won't go in a straight line, because the Fed will do something. They will have to do something. I don't know what it is they are going to do, but they are going to do something, because they cannot sit back and allow the state of play and the status quo, if you like, to continue in the way that it is going right now. The dollar simply cannot afford to continue to weaken. Now, whether we think it's cheap or expensive is not relevant. But the American government, the Federal Reserve, cannot afford for the dollar to be weak for these particular reasons. If they want to weaken it themselves with their own mechanisms, different thing entirely. But they cannot afford for it to be down here. Now, that does suggest that they would probably ease off on certain stimulus packages and put pressure on the US government to do something, which they are trying to do. That's what we're seeing going on in Capitol Hill. There's negotiations going on right now in Capitol Hill, and it was the same with the EU. You remember back in with Christine Lagarde, she was basically saying, "Come on, guys, we can't do it all here. We can't. The central bank cannot do everything. You guys have to take up the baton and start doing something which is going to save the European economy." And the same thing, as I say, is going on in the States, because as I say, that yes, the dollar could fall from here, but I'd be very, very surprised if the dollar falls from here because of what the Fed does.
Oh, mate, I don't know. As I've told you all week, I've just got to stay away from the dollar right now. It's too hard.
Yeah.
It
Yeah,
really-
yeah.
And here
Well,
I
you
am
do.
in dolly in.
Well, and making money.
Well, yeah, not a lot, but yes.
Yeah.
As long as I don't lose it, that's fine. And that's
Yeah.
that was my aim, just to get as safe as I could as quickly as possible.
Yeah.
Because I just don't trust it. I really don't trust it.
There was also a very sorry, mate. Go on.
And I don't often say that. I'll often have an idea that, okay, this is going here, then it's going to go there. But now, I was, as you know, riding this trend line all the way down and waiting for a test, just didn't happen. And it kept going. So when something like that happens, I just go on the sideline and say, well, hang on, I'll wait till that's all over.
Yeah.
Because as you know, as we all know, nothing goes straight down, nothing goes straight up.
No. Even though if we'd never traded before, you made that statement, and then somebody brought out the chart of the Nasdaq, they'd think you were mad.
Yeah, exactly. and quite a few at the moment, to be honest.
Oh,
But
it's mad.
we are in weird times.
What a strange. Yeah, and this is the thing, isn't it? Is that I suppose what we've got to do, and this is something that I was speaking to Mary about last night as well. We've got to think, what is convention? What's the conventional, longer term, historical a thing that happens? Because everything in between does become just noise in many respects. And convention suggests that nothing goes up and nothing goes all the way up and nothing goes all the way down. That's just not the way things happen, because human beings are involved, and it means that that there will be the move towards utopia cannot last, because change will always be there. And actually, Mario did say that to me last night, which I thought was quite interesting. That that the one constant or a constant in the universe, one of the main constants in the universe, is change. So it doesn't matter what we aim for, there will always be change. So nothing for that reason can go up continuously, and nothing can go down continuously, except for palladium. So
says the martingale scale. But gee, I wouldn't like to be trading short martingale on gold or silver.
No, well, do you know what? Yeah, or I know people that have been run over by trading the euro dollar in the same way. Trying to get short on the euro dollar, and yeah, as you say, ouch, indeed. It's just been a crazy run with the euro dollar to the upside, and or with the dollar index to the downside. It's just been painful. But that's where if you are going to trade the martingale strategy, then you have to understand leverage. If you don't understand leverage, then buy. You're done. There's no way that you can trade that particular system without understanding what the leverage play is. But gold is interesting. I was looking at a chart with gold yesterday, and in actual fact, unless you got anything, I'll quickly bring it in now.
I'm watching this pretty closely. This is Aussie dollar. Ouch. I just said Aussie dollar. Yeah, I won't be trading, but it is setting up for a short here. I want it to get a bit higher. If it got a bit higher, I think there's a short on for sure. I'll just point that out to you guys.
Okay.
Aussie US dollar. Poison chalice.
No, really, we'd need to see this on a historical basis. But I you know, I find the movement here with gold quite interesting. You know, do we have this pattern going on where what tends to happen is, because you know, gold has done this before, huge stretch to the upside from 2000 and where we got. I can't even see this chart properly. I've got a lot of charts back here. Here we go. 2005, right the way through to 2011. You know, it just didn't stop. Little kind of correction, I suppose, here, but certainly from this particular point, it was just on an absolute tear from the 2008 situation, and this seems to be what happens with gold. You know, gold likes things to settle down for a bit. If anything happens in the world, then gold just goes on a tear, and that's exactly what's happened. You know, I mean, it would have been even quite late here. You know, that's when the pandemic really hit, but it had already started its move in 2019. In May 2019, it had already started to break to the upside, but the pandemic just has stretched it up again. So if we were sort of like looking at this particular parabolic move from the last time that we had an amazing rally, and the last time we had a significant you know, issue going on, there's a chance here that I can't even get the chart up because oh, don't even know I can go up there, mate. Actually, I can't look at it on this. I can't minimize it enough. But it goes way beyond.
Tells you everything, doesn't it?
Yeah, absolutely, and this is a monthly chart. So gold could get up to 2,500. I'm sure it's going to be around there by the time you get up there. 2,500 if we were looking at that on a similar basis. And if we're going to be trading gold and looking at gold on the longer term, then this does suggest that what we're waiting for is a calming down, and it probably won't be, looking at this, maybe for some time, but a calming down with gold. So it just pops and pops and pops. Then it comes back down to rest at a level and does this again until the next thing that's going to go, and then it goes up another leg. You know, so gold certainly looks like the kind of thing that moves in a certain way. Just looking at the last two waves, but you'd have to look at over this on a 100-year basis.
What is that line you've got on there? What is that white line?
That is probably a price point from another pair or another currency, because
I'm going to say,
yeah.
How do you get up? There can't be any resistance up there. There's never been there.
No, because MC4 just draws the line on price. It doesn't draw it on the chart. So if there's anything else that's at 2004, or in actual fact, even at 6,000, it might have even been a FTSE line, you know, coming from 6,000 all the way down or something like that. So yeah, that's just what MC4 does. But so yeah, with gold, you'd have to say that to try and trade this now with a train running is going to be pretty tricky if you are looking at a longer term investment in gold. Now, if you are looking at trying to trade this on intraday basis or maybe on a quarterly basis, different picture entirely. But if you're looking over the longer term and wanting to invest in gold, you've got to wait for the next thing to calm down. You know, you've got to wait for the next possible leveling off in this situation. But according to this particular move, that lasted, as I say, that was a good 3 years before things calmed down. Now this started last year, so we're already 1 year in. So it could be another couple of years just edging forward with gold. If we were going,
only done this once before on that chart.
Yes, only done this once before on this chart. We'd have to go 100 years back really to see, because you know, if we're looking.
Sorry, what I mean is we're now in the 5th month of buying.
Yep.
That's only happened once before since
1999. Right. Well, 5 months of just going
5
up
months
and up
in a
and
row.
up.
Yep.
Yeah.
Yep.
Yeah. Where did it come back to though, mate? You know, because if it came back to this particular point, 1922, the previous high, you know, would you be comfortable enough just buying in here, or would it still look parabolic?
Look, I'm happy not to ever trade gold in my life. It doesn't
Oh yeah,
bother
you don't
me.
like gold, do you? Because of the that jeweler.
That's right, prick.
Yeah.
So so I have really no, unless somebody could convince me that I don't know what they need to convince me. I just don't need to be there, you know.
Yeah.
I get the attraction because it's gone nuts. I totally do, and I don't want to talk anybody out of it. But there's so much other stuff around that I don't need to think about gold. And I don't.
No, and this is the thing, the other thing that we were talking about last night is I can't remember this this cryptocurrency that Mario was talking about, but Shukri will let us know about this. There's one that's up 10,000%. 10,000%, and I can't remember how long it was, but it's this year. Might even be in the last month, and we were talking about it, and it does make the crypto space sound incredibly attractive when you think that you could put on a pound, if you like, and get 10,000 back. No, sorry, 10,000% would be £100, wouldn't it? £100 and 10,000 back, but their Hex, was it Shukri? Maybe Hex. I can't remember what it was, but he said that there was one that's gone up 10,000%, and that's what happens with cryptos. And you get that trade on, and you think you're an absolute genius, and then you trade the next 10,000 cryptocurrencies, and they all go to zero, which also happens. So yeah, just a crazy world. It's a crazy world. But we, as I say, the one thing we need to be just aware of is what is the constant. And if we understand the constant, then we can say, right, well, this is about money management above all else. It doesn't really matter what you trade in many respects. If you don't manage yourself and you don't manage your money, then forget it. Because Martin Gale, just going back to that point earlier on, is a strategy, and it's a good strategy in many environments. But in other environments, it will absolutely batter and bruise you. But you've got to be able to get up off the floor, haven't you? And you won't if you don't manage your money and yourself properly.
You want to have deep pockets at the moment. If you are on the wrong side of gold, euro, US dollar.
Yeah. Yeah.
Ouch
Indeed, mate. Yeah. There's certain times that Martingale just won't work. I think the thing with Martingale is it's really good in ranges, heavy, deep ranges, month-over-month ranges. But when it comes down to trends, as you say, you get caught on the wrong side, then you're in terrible trouble.
You'd want to have very big kahunas and a very strong heart.
Yep. Yeah,
and
you need pockets. To get and deep pockets. Yeah, and a sound money management philosophy as well.
Yeah, all the above. And look, we're not saying for 1 second it doesn't work.
No. I mean, I've done some Martingale stuff myself, and I made money a lot. I made really good money very, very quickly, but it actually turned on me, and I was pretty much back to where I started. So it was pointless exercise in the end. Yep. I think you kind of have to know what your parameters, your time parameters are going to be with something like that. And the unfortunate thing is that you get kind of people that will go and find that crypto that's up 10,000%, and they think that they've cracked it, especially if it's one of their first trades. But within 5 years' time, they won't be where they won't be there, because it's just not a sound approach. You can't approach the market like that. It will expose the market's a little bit like if you imagine that I always think of it like you're a block of concrete, and the market is water sitting on this block of concrete. And if you've got any holes in your concrete, then it will expose it, and it will just broaden it and just eat away at it over time.
It's amazing, isn't it?
Yeah, absolutely. Yeah, it's a really good analytical tool into yourself. But yeah, you got to be very, very careful.
Our voyage of discovery, it really is,
Mm.
and always has been. I'm feeling I've missed this. Well, I haven't missed it, didn't set up, but it looks like we might be too late for that setup that I was talking about on Aussie US dollar. Maybe
Well, the
not.
DAX has taken off to the upside. The FTSE actually doesn't look great anymore for failing significantly to the downside. Some of those US markets are frozen in time. We'll just have a quick look at the DAX. Or on my screen here, looks like it's looks like it's taken off.
Shukri, when are we starting this this little pool that we're going to do? We'll do exactly that.
What's the pool?
Oh, we're all going to put in 100K and away we go.
Oh, is that what it is? Is that what it is?
But not easy since the 100 times are in smaller exchanges, which we will see next week. Okay, we'll do all of that. Tuesday. You want 100K on Tuesday? Geez, you're in a hurry.
There we go, mate. The DAX it's edging through its neckline here. Doesn't look like it's going to hold at this stage. Still got another 4 minutes. Going to be interesting to see whether the trade comes into the upside towards the top of the hour here and holds the DAX above for the inverted head and shoulders. This looks like the level we've got to see a price pattern change on the 5-minute chart. So as I said, if you guys are bullish on equities, then the DAX looks pretty good. Got to just get a little bounce here. You get a little bounce here off the 12,720. It looks like. Then that's going to look pretty good for some further upside.
Yeah, the dollar's getting a little bit of a sniff now. Interesting. We'll see how far that dollar's willing to go. We will see. So I can't find anything on the 30-minute charts just now, mate. But what I would advise is if you feel that dollar can rally, just wait for a retest. Otherwise, you're punting. You're really tossing up a coin. And I don't have anything at the moment, I'm afraid, on the 30-minute charts. But I've given you plenty of ideas, guys. Aussie yen, Kiwi yen. What else did I give you? Aussie CAD and the dollar index, is it pulling back? Actually, let's have a look at it. You done, mate?
Yep, done for now, mate.
Well, actually, I was going to bring this up because it does have a potential little double bottom sitting on it. The dollar index, and there she be.
Yeah, I see that
tied
too.
on this thing. There. So there's a little bit of an idea that may come back to this level that we spoke of. I'm sick of calling levels on this. 94.70. You would have plenty of time to get into that if you think that's the case. Like I said, I've just about wiped it because I've been waiting for it to come back to that line since here. That's didn't mean to do that. Why does it do that? 96.95. So that's like 400 pips ago. I was waiting for this. So I've let all of that run away. And that's why I'm just a little bit SH1T on it, because it just hasn't done what I anticipated that it might. Yes, indeed. I am an Aussie bear today, yes. Not necessarily against the dollar, but against the yen, maybe even against the Kiwi. which is interesting. I know some of our top analysts are bullish this pair and have been for ages. I mean, they're in trades, so that's fine. They've been making money. But they continue to have that bullish outlook on this pair. I don't, especially given what we heard on Tuesday. And the Kiwi got a decent number as well today. So I'm a little bit bearish Aussie Kiwi as well. Certainly we're a little bit toppy here. I'd like to see it set up on maybe one of the smaller time frames, I'd have to say. And yeah, kind of there. Let me see. Oh, forgot about that thing. That's a bit of a shame. Can't use that. It's too high. Okay, so the only option I would have at the moment would be if we came back to here, gave us a little false break, then I could trade it short before no. That would be it. Kiwi yen, I'm still bearish that one because of the setup that I've got. But yeah, I think Aussie Kiwi is a possibility. Aussie CAD certainly. Aussie dollar we've already spoken about, and that may well be positioning itself to go. On an hourly chart, maybe if that comes back, then there may be an entry there. May well be. And this will be very, very similar on what you're seeing at the moment. These moves on the dollar are going to force these down, obviously. It's not my thing to take them off one candle, but a break back here would be interesting, I'd have to say. Of course, if you don't trust the dollar, as I don't, then if you see something like this on any of these, break, consolidate back above and retest, in particular the confluence area on this Aussie dollar, but it'll be the same on every one, then there's a long in play, and that little run at the moment may well be false. It may not, because that double bottom is certainly becoming evident. Yes, Emmanuel, there are signs that the Aussie can go back. That's for sure. To be honest, I'd prefer to see double tops at the top, but that's certainly there. It's a double rejection. You can certainly say that. But there's no setup there for me right now. And as I say, I don't trust the dollar right now. So I'm far happier trading these miners. And I've been waiting for them all week, and they've just set up today. So I'm happy if they get me into some trades and into some money. That would be good. So you're not seeing my screen. Oh, I'm sorry. Because as always, when I go to screen number 2 or beyond, I never come back to screen number 1. What a dipstick. Mate, I don't see any point in me continuing because I haven't got any setups right now. But
yep.
Pullbacks, even this one, Euro Yen, if it were to pull back here, makes an interesting case for a short. What I mean by a pullback is pullback to the trade line. So back to here, and we could look for A, B, C, maybe on an hourly chart. I guess I'm a little bit bullish the yen when it comes down to it. That's probably where I'm sat today. If I have to nominate a currency that I'm keen on, it's the yen. And I really haven't got a lot of concrete foundation to be saying that. I've got to add that, but it's just a little feeling that you get, that little buzz in your brain that goes, okay, maybe it's yen day.
Could be yen day. Well, do you know, mate? I think this deal is paramount and pivotal to further upside in global equities, and I think that if they don't get it out of Capitol Hill, then it's probably going to boost the yen potentially. That there could be a little bit of a rush towards that.
Well, I'll just show you kind of what I've got in my head, and I'll go to my second screen again and have a look at FinViz. which is my kind of relative strength indicator, if you like, all against the US dollar. Now, if I look at the quarter, the yen is the worst performing currency. If I look at the month, and that doesn't mean the month of August, it means a month ago, it's starting to creep up a little bit off the bottom. If you look to the weekly, it's in exactly the same position. But if you look at the daily, it's sneaking up. So you've got dollar yen, which were down here, have now come up to the top. So apart from the pound and the dollar, which I'm in, I'm keen to get short Aussie yen, CAD yen, not so much Swiss yen, Euro yen, and Kiwi yen. And that's why, apart from the chart patterns that I'm seeing. So it's based a lot on relative strength that I'm talking yen bull today, but also on the setups that I've got. So guys, with any luck at all, well, hopefully not luck, it should be by design. And again, we apologize for last night's US session being a non-event because you guys couldn't get in the room, and we absolutely didn't know why and couldn't fix it at the time. But we believe it was just a furphy because there wasn't, as far as we could tell, any other show in progress at the time. But that was the message that you guys were getting. Shouldn't happen tonight. There are pray. Won't help me, Shukri. If I pray, then that's probably going to happen in reverse. So I won't do that. But I'll cross my fingers. Put it that way. So Ash, what do you think?
Well, the market's just got a little bit quiet. We had an amazing little run in the DAX to the upside initially this morning, but it's cut right back in. Looks like the Dow is a little bit flat as well. Looks like the FTSE's struggling as I thought it may. What I think right now is that there's probably something going on that is bigger than the news we've already had, and it's probably this meeting on Capitol Hill that we're waiting on.
Right. Okay. There you go. So take that into consideration, guys. If you are trading and in the market, it may be worth noting that, and indeed waiting for the result of it to happen. Righto, mate. Let's do it. Let's go, and we'll be back. Of course, those of you who are not in the US session or we've got the original show as well tonight. I've got Strategy Leader Coaching, so I've got 3 to go. If you're in Strategy Leader Coaching tonight, I have prepared something for you on trade lines. Got to get them right, guys. Just got to get them right. So we'll be doing a little presentation on that in the Strategy Leader Coaching. In the US section, Shukri is going to share with us, I think, some timing that he was talking about that he couldn't do yesterday. And those of you who won't be in those, guys, we will catch you next
tomorrow,
Monday.
Oh, go on, yeah, next Monday, yeah. So not tomorrow.
Yeah. hey, it's Friday tomorrow.
Yeah, nice.
What used to be
nice.
NFP Day?
Yes, it did. You're absolutely right, mate. Yeah, it did. Gosh, yeah, we're almost at the end of the week already. It's amazing, isn't it? Average earning non-farm payrolls tomorrow, non-farm employment change, tomorrow, average earnings tomorrow as well. So some big numbers.
Sure, I'll never get used to calling it that, but
yeah, all change. Yeah,
it is what
NFE.
NFEC.
Yeah.
Get out of here.
All right, buddy. All right, have a good one,
guys. Have a
great
weekend, everyone.
See you next Monday, 5 to 8.
That's the date. Don't be late.